Good morning, children. Today we will study about the microeconomics, unit number 1, and that unit is national income and related aggregates. This is the first unit, and we are going to study about the introductory macroeconomics. First topic is what is macroeconomics. Macroeconomics is that branch of economics which deals with aggregate or issues related to the economy as a whole. Here we study about the economy as a whole, that is the national income, and we also study about the employment of the people. Now the second topic is on the basic concepts in macroeconomics. So what are the basic concepts in microeconomics? First is consumption goods. Consumption goods are basically, these are goods which are directly used for the satisfaction of human wants and are not used in the production of other goods. Example, ice cream and milk. Ice cream and milk. These goods are classified into 4 categories. So basically durable goods, semi-durable goods, non-durable goods and services. So consumption goods are those goods which are used for the satisfaction of human wants and are not used for the further production of any other goods. These are the directly consumed by the human beings, or it is directly consumed by the consumer. It is divided into 4 parts. Durable goods. First is the durable goods. These are those consumer goods which have a certain lifespan of say more than a year or 2. It lasts for 1 year or more than 1 year. So all those goods which last for 1 year or more than 1 year comes under the durable goods. They are basically, you can take for the example TV, or you can take example for the TV, and also you can take example as the AC, which lasts for a longer period of time. Now second type of good is the semi-durable goods. These are those consumer goods which have a lifespan generally lesser than durables. So lifespan lesser than durables. A very good example is the crockery and cloth, which have a very less lifespan or less lifespan than the durable goods, that is the TV and the AC. The third is the non-durable goods. These are those consumer goods which get exhausted in a single use. This word is very important, single use. It gets consumed in a single use. A very good example of these are fruits. It cannot be used for a 1 year. It is directly consumed. Then second is the vegetables, also the milk. It cannot be consumed. It can be consumed at once. So these are called non-durable goods. Now the last one is the service goods. So services are basically, these are intangible goods that cannot be seen or touched. However, beneficial can be enjoyed. So these are intangible goods that cannot be seen or touched. However, the benefit can be enjoyed, like watching a movie. I am teaching, then that is also basically a service. Then medical service is also comes under the medical facility. It also comes under the services. Next is the, so we have in the basic concept of macroeconomics, first we have studied the consumption goods. Second, we are going to study about the capital goods. What are the capital goods? Capital goods, these goods which are used in the process of production for several years and which are high value are called capital goods. So the goods which are used in the process of production for several years. So these goods are used for the process of production for the several years and which are high value These goods are of very very high value. It is used in the process of production. These are basically called as the capital goods. Example, the building and the machinery. Now, the basic concept. First we have studied consumption good. Second we have also studied the capital goods. Now the third topic is of the final goods. So final goods, the goods which have crossed the boundary line of production and are ready for use by their final users, that is the consumers. Consumers are the final users. So by the final users such as consumers and the producers. So consumers are the final users, producers are the final users. So all those goods which have crossed the boundary line of production and are ready for use by their final users are basically called the final goods. It is consumed or finally used by the consumer and also by the producer. For the consumer, a very good example is the milk and also ice cream. All these are very good example. For the producer, building, machinery, these are the good example of the final goods. Now the fourth one is intermediate goods. What are intermediate goods? The goods purchased by a firm for the use in production. These goods are purchased by the firm so that further it will be used in the process of production of other goods are called basically the intermediate goods. The goods purchased by a firm for the use in production of other goods or for the purpose of reselling are known as intermediate goods. Very good example is steel. Steel is purchased by the car maker to make the car. Steel is not directly consumed by the consumer or by the producers. Now the fifth topic is about the stock. Stock, it can be defined as any quantity measured at a particular point of time. Any quantity measured at a particular point of time. Example, number of machines in the plant on 31st March. So by the 31st March, how many number of machines are there in the factory? Basically called the stocks. So this is very important. Any quantity measured at a particular point of time. Similarly, the example is amount in the bank account on 20th November. So at the 20th November, how much money you are having in your bank account is basically called the stock. Now the next topic is the flow. Flow, these are defined as any quantity measured per unit at a particular period of time. This is very important. Any quantity measured per unit at a particular period of time. Very good example is income or expenditure over a period of 1 month or 1 year. So in 1 year, how much you have expend, or in 1 year, how much you have made the income will basically come under the flow because your money is flowing. Now the next topic is about the gross investment. A gross investment is basically the total addition of the existing stock of capital during a given period of time. The total addition of the existing stock. A company has the existing stock. In that, how much stock you have added in a given period of time, that is say 1 fiscal year, then that is called the gross investment. Gross investment is equal to, the formula to calculate the gross investment is equal to expenditure on purchase of fixed asset in an accounting year plus expenditure on inventory stock in an accounting year. If both this will add, this will be equal to the gross investment. Now the last topic, last point is depreciation. It is the loss or fall in value of fixed asset in uses on account of normal wear and tear, normal rate of accidental damages and expected or foreseen obsolescence. So because of wear, normal wear and tear, whatever loss is there or fall in the value of the fixed asset is there, that is basically called depreciation. Gross investment is equal to net investment minus depreciation. So by this we have completed one topic, that is the basic concept in macroeconomics. Thank you children. In the next video we will learn about the next topic. Thank you.